Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2 of our QQQ guide, we'll cover the key benefits, potential risks, and tips for investing wisely. Market volatility and drawdowns. Growth stocks, which dominate the Nasdaq 100, tend to be more volatile than value stocks or the broader market. This means the value of your Nasdaq 100 ETF can swing significantly in shorter periods. You might see rapid gains, but also sharp drops. Historically, during bear markets or economic slowdowns, growth-oriented ETFs like those tracking the Nasdaq 100 can experience significant drawdowns. A drawdown refers to the peak-to-trough decline in an investment. It's not uncommon for these ETFs to fall more sharply than broader market indexes when investor sentiment sours or economic uncertainty rises. Are you prepared for potentially bumpy rides? Interest rate sensitivity. Growth stocks often rely on future earnings potential for their high valuations. When interest rates rise, the present value of those future earnings can decrease. This is because higher interest rates make it more expensive for companies to borrow money for growth, and they also make safer investments, like bonds, more attractive. Changes in interest rates can directly impact how investors value growth companies. If the Federal Reserve raises rates, many of the high-flying stocks in the Nasdaq 100 might see their valuations shrink. This sensitivity means that shifts in monetary policy can have a substantial effect on your investment in a Nasdaq 100 ETF. Who should consider investing in a Nasdaq 100 ETF? Investing in a Nasdaq 100 ETF like QQQ isn't for everyone. It truly suits specific types of investors looking for particular outcomes. If you're wondering if this ETF aligns with your financial goals, consider the following profiles. Long-term growth investors. Are you someone who thinks in years, not months? If so, the Nasdaq 100 ETF could be a great fit for you. This ETF is especially suitable for investors with a long-term perspective aiming for significant capital appreciation. The companies within the Nasdaq 100 are often leaders in their fields. They continually reinvest in research and development. This focus on innovation drives their potential for sustained growth over many years. Think about how much industries like cloud computing, e-commerce, and artificial intelligence have grown. These are the kinds of companies that dominate the Nasdaq 100. An investment here is a vote of confidence in the future growth of these high-performing businesses. You need patience, as market ups and downs are normal. But for those ready to ride out short-term fluctuations, the long-term potential can be substantial. Investors seeking exposure to innovation. Do you want your investments to directly participate in the advancements shaping our world? The Nasdaq 100 ETF offers direct exposure to companies at the forefront of technological advancements and disruptive innovation. This isn't just about general growth. It's about investing in specific trends. These trends include artificial intelligence and machine learning. Companies developing the next generation of smart technologies. Biotechnology and healthcare innovation. Firms pushing boundaries in medicine and health solutions. Cloud computing and software as a service, SaaS. Businesses providing essential digital infrastructure. E-commerce and digital consumer services. Companies transforming how we shop and interact online. By investing in a Nasdaq 100 ETF, you gain a stake in the companies creating tomorrow's solutions. You're not just buying stocks. You're betting on progress and the ingenuity of these market leaders. It's a way to align your portfolio with the industries consistently pushing the envelope. Constructing a portfolio with Nasdaq 100 ETFs. You've learned what a Nasdaq 100 ETF is and its benefits and risks. Now, let's look at how to fit it into your investments. Adding an ETF like QQQ can boost your portfolio. But it works best when you combine it with other assets. Building a smart portfolio means thinking about how different investments work together. It also means sticking to a plan, even when the market gets bumpy. Strategic asset allocation. Think of your investment portfolio like a balanced meal. You wouldn't just eat dessert, right? The same goes for your money. While Nasdaq 100 ETFs offer great exposure to growth stocks, they are just one ingredient. A smart investor mixes different types of assets. This helps spread risk and capture opportunities across the market. Consider these ways to blend a Nasdaq 100 ETF into your financial plan. Complementing with value stocks. Nasdaq 100 ETFs focus on growth. Value stocks are often established companies trading at lower prices. Pairing them helps balance aggression with stability. When growth stocks slow down, value stocks might perform better. Balancing with bonds. Bonds generally offer more stability than stocks. They can provide income and act as a cushion during market downturns. Adding bonds to a growth-heavy ETF portfolio lowers overall risk. This creates a smoother ride for your investments. Diversifying globally. The Nasdaq 100 primarily focuses on U.S. companies. Think about adding international stocks or emerging market funds. This broadens your exposure beyond a single country. It can also open doors to growth in other parts of the world. The goal is to create a portfolio that fits your comfort level with risk. It also needs to help you reach your financial goals. Your personal mix might be 60% stocks, 40% bonds. Or perhaps 80% stocks, with a portion dedicated to a Nasdaq 100 ETF. What allocation makes sense for your unique situation? Dollar cost averaging as an investment strategy. Market volatility can feel scary. Prices go up and down. It's hard to know the best time to buy. This is where dollar cost averaging comes in. It's a simple, powerful strategy. With dollar cost averaging, you invest a fixed amount of money regularly. This happens no matter what the market is doing. Here's how it helps with Nasdaq 100 ETFs. Reduces timing risk. You don't try to predict market highs or lows. You buy consistently. Averages out your purchase price. When prices are high, your fixed amount buys fewer shares. When prices are low, it buys more shares. Over time, your average cost per share tends to be lower. Removes emotion. This strategy encourages discipline. It helps you avoid emotional buying or selling. Sticking to a schedule keeps your long-term plan in focus. Imagine you decide to invest $200 in a Nasdaq 100 ETF every month. Some months, you'll buy when the price is up. Other months, you'll buy when it's down. This consistent approach smooths out the bumps. It ensures you're always participating in the market. Rebalancing your portfolio. Over time, your carefully planned asset allocation can shift. Some investments grow more than others. For example, if your Nasdaq 100 ETF does very well, it might grow to be a larger part of your portfolio than you intended. This can increase your overall risk. This is why rebalancing is crucial. Rebalancing means adjusting your portfolio periodically. You sell some of your overgrown assets and buy more of the underperforming ones. This brings your portfolio back to your target allocation. Here are ways to rebalance your portfolio. Set a schedule. Most investors rebalance once a year. Some prefer every 6 months. Choose what works best for you. Adjust to target percentages. If your Nasdaq 100 ETF now makes up 30% of your portfolio, but your target is 20%, you would sell some shares. Then, you use that money to buy other assets that are now below their target. Use new contributions. If you are adding new money to your investments, direct it to the underweighted asset classes. This is an easy way to rebalance without selling anything. Rebalancing helps you manage risk. It also ensures you are taking profits from winners and buying into assets that are relatively cheaper. It's a way to keep your financial house in order. Are you regularly checking if your portfolio is still aligned with your goals? Investing in a Nasdaq 100 ETF puts you directly into the action of leading technology and growth companies. While this offers exciting potential for long-term gains, it also comes with notable risks. The ETF's heavy concentration in tech means higher volatility is possible, especially during market downturns or interest rate shifts. Before you invest, consider your personal financial situation and goals. Look into how a Nasdaq 100 ETF fits with your overall diversification strategy. Always do your own research to ensure your choices align with your risk tolerance. This video should help you take your next step with confidence. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.